some range expansion. Now, the overriding issue for me is there's another overriding larger range that we're still dealing with this smaller range. So that gives us down here 3,600 all the way up here to 41 or 4,200. So looking at Paul's charts in the morning and going along with all the other stuff, I don't know necessarily from what I was speaking with Paul this morning is that there's going to be any expansion of this range above this 42 to 4,300. So until we start seeing that complex start building up and out even further than what Paul's been discussing and what we've been discussing, I really don't see us moving a lot higher, at least through end of year. Now, nobody has a crystal ball. We don't know. It's just, I think it's going to be very difficult for us to move up through here from what we're seeing in the complex. So will we get some expansion out of this smaller range sooner than later? I would anticipate OpEx or post OpEx probably will get some sort of movement out of this range, but I still don't think that there's going to be some just large expansion like most people are anticipating. Santa Claus rally, whatever you want to call it. But again, crystal ball, don't know. So we'll continue to defer to the data. Any thoughts on that, Taylor?
Um, why is it not picking that up? It's annoying. Yeah, no, not really. That's the same thing I'm seeing as well. Just yeah, tight ranges.
Okay. Let me switch. Okay, so here's Paul's morning call PDF, basically. We went over the tick model. So here's the numbers that he put out for this morning. I encourage everybody to look at even if you don't listen to the morning call, which I encourage everyone to listen to, even if you listen it on 2x and speed it up and just catch the highlights of it. At least look at the PDF because these are important levels, ranges that are all on this one sheet right here. Even if you printed this out or saved it to your computer and popped it up somewhere, you would look at this and be like, okay, this is where we're at, and this is where we tested, and pretty much we came right down to this 4,000, and even we tested 39-ish below that. All right, so this is just definitely important levels. We saw that minus Gex had moved up to 3,900, so obviously they came down and tried to get into that area, and then we kind of closed around the 4,000. So again, put these on your charts or on your computer and watch that. So here is the transition area
Yeah,
that
hey
Paul was.
Michael, just backing up real quick.
Yeah, yeah, back up.
Yeah,
Yep.
like whether you're using the automated script or you're plotting your own levels, I would encourage you guys if you don't have any levels at all plotted on your chart, you should start at least at the bare minimum, put like plus minus gex and maybe zero gex in the transition levels, but all this stuff's important and you're really not going to understand it until you visualize and see how price is interacting with these levels.
Yep, 100% agree. Yeah, so even if you're not using the automated, you can put horizontal lines. I think everybody's charting software does horizontal lines, and you can actually just match the numbers, and then you can put text on them. That's what I was doing manually before we had the trading view scripts,
Yep.
and it was a labor intensive, but we've done the automated trading view scripts, which are just a
And labor
lifesaver.
intensive, it takes like 2 minutes to do it manually, so
Yep, I agree.
wake up 5 minutes earlier, guys, and do it. It's worth it.
Yeah, right. And if you're doing 4 or 5 stocks, then fine. Now, if you're doing 20 to 30 stocks, that's why we automated this because all those tickers are just automated. So now you don't have to worry about that stuff. Yeah. So anyway, transition area here that Paul had outlined, and then the positive deltas here, negative deltas below, and pretty much we're stuck right here within this range. There's 4,100 to the upside, there's 3,900-ish to the downside, but we closed right at 4,000. I mean, just almost plop right in the middle of this range that we've been discussing. So again, impetus to move the upside or downside, we're probably going to get something sooner or later, but right now we're just stuck. Pretty much in the middle. Paul outlined 40, 50, 4,000 here is a 0 DT transition. We closed right at the bottom of this transition. I think I'll check the SPX, but I think we actually came down to maybe 39.50 at the low, but we'll check and look at that. There's one DT, and here's the combos. Same deal, 39.50 to 40.25. We finished at 4,000, so just right in the middle of that, transition range again. So you can see kind of where the deltas are there to the upside. And where we are to the downside, 3,900 there and 4,100. So again, same range. I don't know. I think we're beating a dead horse on that one. And here, I think this is one of the most important slides for me to watch for the day when this comes out, to see where plus Gex is and where negative Gex is, and then where we are within the transition. And basically, we were right here. We were at 4019, 4019, that when Paul put this out, and we closed at 4,000. So we closed right, you know, within this larger transition range. So I think I beat that to a dead horse. So anyway, let me see what we came down to. Uh, we came down 39.64, so close enough to 39.50. I mean, with just a few more points. So again, same range over and over. I'll go over the tick models real quick. So ARCX is our back tested tick. Taylor already went over this today in the market status, but long term red is below the cyan, which that is a cash model. And then our shortest term tick did not even turn up towards the end of the day. So this is important to watch. If you're looking to do something long on a shortest term, highly volatile trigger, this would need to cross back up here and start moving that, but we didn't even get above that. The other key thing for me is the tick US. New highs outpace new lows again. That continues past 5 or 6 days. So nothing changes there. But we actually made a newer low after that Fed news there on the CT here on the filter tick. So that's important to me. And we really didn't see much come in at the end of the day. So just kind of sideways range there. So we'll watch this going into tomorrow. So OPEX on Friday, going to be highly volatile, I think, into Friday, but just no signals at the moment. I mean, this is just kind of the environment we're in. It's sideways chop. Personally, I'm probably not going to be doing anything much until after Friday, maybe even not till Monday next week, unless for some reason we do get some larger move out of this range. But I really am not seeing any definitive signals to say to do anything, over the top or out of your skis or anything. Just kind of wait and see kind of how all this plays out through Friday is kind of my thought. Iceberg charts, SPY, we still have a significant amount of in the money calls. Let me pull that up real quick. I bring that somewhere. Okay. Any thoughts on that, Taylor? I'll pull the iceberg chart up real quick.
No, I don't have anything on the iceberg chart. Any thoughts on that?
No, anything on market status. You did a great job.
Oh, yeah. I mean, there's just I mean, depending on your time frame, I mean, 400 still a big important level there. We got liquidity zones kind of at 403 and 390. So, Michael, to your point, we're kind of just in the middle of the range right now on the hourly time frame. Now, if you want to zoom into the 2 minute, I mean, we're right in the middle of COTMP and COTMC. So again, not much to do there until we get to kind of one of those extremes, see how price interacts. But yeah, I'm still in more of a scalping day trading mode rather than trying to like uh, longer term moves right now.
Yep, I agree. So, SPY iceberg charts, we still have this massive amount of in the money calls down here that are going to have to be dealt with going in to Friday. And you can see pretty much the peak there as we get there. So we have all these over here. We did have a little bit of, I think this might have increased just a little bit, but not much. These in the money puts here, but these are way up here also. But just the magnitude of this is up over 1.5 million, close to 2 million, 1.75 million, and this is really only up to half a million. So obviously this called dominated side here in the money compared to this put side. So um, yeah, Taylor posted in the voice chat there kind of what he was looking at. So okay, that's all I got. Anything else Taylor's got or anybody? I think I see Paul on there. I don't know if he wants to add anything. I don't know if how his connectivity is, but or anybody has any questions, thoughts, comments, um, snide remarks. Any thoughts about the market? Anything
I
you
always
want,
have
Travis?
snide remarks. You know that.
That is true.
No, I don't. I don't have anything to add. I think you did a great job.
Is
I'd like to ask you something, Paul, or or Taylor or whoever about the Vixpiration being after after the OPEX, and so I didn't look at the VIX OI and distribution lately, but I know that people are pretty much were betting on VIX calls. So if those VIX calls lose their value, get closed, or whatever happens to them, should that be fuel to the upside in theory?
Taylor, you wanna take a stab? You want me to?
Yeah, Doc, if you don't mind repeating the question, I was trying to post something in the chat, and I completely zoned out on you. Something
So
about
I mean,
Vixpiration.
basically, Vixpiration. There were more that calls and puts. Last time I looked, it was call dominant. People were hedging for the FOMC. It's no shock. Actually, I bought some puts in VIX the other day when we were up a little higher. That said, it seems to me like as those calls get closed, lose their value, whatever, that the natural thing would be for VIX to compress, and whatever effect that may or may not have on the market, they can sometimes both go in the opposite direction, like we saw today. VIX went down, SPX went down. So just looking at the effect of the VIX calls that are in there, if they're still in there, I didn't check, like I said, should that not be vol suppressing and maybe putting the market up? And I see some, I don't know if anybody's pulling up a VIX thing there.
I mean, I'm gonna be honest with you. I don't know. I don't know that much about VIX. I don't know. Trading the VIX drives the market or vice versa. Um, yeah, I'm sorry I can't be more help to you there, but I don't know related to Vixpiration.
Yeah, let me take a stab. The VIX, and as you guys have heard me say in the past, the VIX is kind of marches to his own drummer or her own drummer, because it's a direct measure of the at the money volatility between the 23 and the 37-day forward looking of the SPX, right? So there's that. It's an index, right? And so it's made up of constituents, so it's got a value. But then there's the options that go with it. And so there's, just like in any of the index ETFs or whatever, there's kind of this contention between what does it represent versus is there a mismatch or an arbitrage opportunity. And I'm going to echo Taylor here. The fact that VIX went down and SPX went down today is not normal. It shows that anytime the VIX goes down in absolute terms, implied volatility is approaching realized volatility in the forward looking. So they're estimating in the next 23, 37 days that volatility is going to come in. That is almost irrefutable there. So Doc, I think if you take that as its lead, and then you take, there is a whole bunch of calls that are sitting out in the VIX. You're absolutely right. And you can look at the GEX ratio. Now, as you guys have heard me say, though, we've been seeing over time, we've been seeing the VIX actually drop more and more and more, which is indicative of puts going in, not calls going in. And the GEX ratio is now at almost unity. And so what we're seeing is puts in the VIX go in, and what does that mean? It means there's no fear.
That means I'm not the only guy that bought VIX puts.
Define lunacy.
Yeah, lunacy, and it really is indicative of a lack of downside participation in protection. And the last 3 days this week, We've gone from a VIX, a GEX ratio. This is a short-term ratio of 1.4 down to unity, down to parity. So all, you know, the GEX ratio falls when calls are closed and puts are open. It's a combination of both. And there's only one way to interpret that, but because it's the VIX, we have to flip it. We have to flip the model. If it were an equity, we would say, oh, people are getting nervous. They're buying puts, they're closing calls. If you're buying puts and closing calls on an equity, you're bearish. You're doing this on the VIX, you're bullish. And frankly, since the middle of November, people have become more and more and more bullish on the overall market, bearish on the VIX. So
Now, I remember you've done some back testing on GEX ratios, and I'm a little rusty on that. And maybe for some of the newer folks, can you just walk us through what GEX ratios you found to be meaningful or actionable? When it falls to a certain level, we might reverse, and when it goes up to a certain level, the move might be over. Can you just kind of walk us through that and remind me a little bit?
sure. And we did a Taylor and I did a podcast with Bear Trap Discord the other night, and we actually covered part of this. And I think the takeaway for the GEX ratio, it everyone is probably familiar with the put call ratio. And the put call ratio literally is the number of puts in the complex ratioed to the number of calls in the complex. And it's a good measure because it tells you on balance, where people are kind of positioning, but it doesn't tell you when. So what happens is it you lose all sense of timing, whether it's next week or next month or next year when you look at just PCR. And so we believe PCR is flawed and it doesn't give you that sense of time, and we need time if we're going to act on this stuff. So we created the GEX ratio, and the GEX ratio is literally when you have calls that are being added, they have a gamma if they're shorter term and near the money, and those represent where people are speculating. And the same thing on the put side. And so we accumulate that for a symbol. And what you find is that as you look out over time, GEX gets a little smaller and smaller and smaller as you go out in time and as you go further away from the at the money strike. But when you ratio those two, you get a really good sense of what people are doing in terms of positioning. And I would say it's, between like right now and out probably 4 to 6 weeks. So from our perspective, it gives a much better visualization and estimation of the shorter term market, not the overall, quarter over quarter thing, but more on the immediate horizon. So you're right, Doc. We did back test this extensively. We have 10 years of back testing data, or almost 10. And the takeaway is this. For equities and equity indices, and if you go up to the Fish Pond channel, you'll actually see the work that JB, one of our great users, you'll see the work that he's done. And when he's able to, he posts what's called the Fish Pond map. And it's a series of, I can't share my screen right now, but it's a series of basic color-coded, yeah, thank you, color-coded with reds being low GEX ratio and greens being high GEX ratio for the individual symbol. And why that's important is that when you look at that over a broad period, you'll see that the market is either heavily dominated on the put side, red, or heavily dominated on the green side, which is the call side. And the testing that we did basically said if you're below if you've bottomed out, so you've gone from say zero point 0.8, zero point 0.7, zero point 0.6, 0.5, zero point 0.4, so you've come down to a minima, and then you start the trajectory back up. When you get to about zero point 0.5, zero point 0.6, it's a good entry point on average, right? You do it over a large number of trades. You do it, mechanically, and you get into the trade. You buy, you can buy the equity, the underlying, or you could, buy an out of the money option. Um, what typically happens is that over a course of time, and time is important here, generally less than 20 days, less than a monthly cycle, it'll go up. Generally go up before it hits what we call the first pause, or where it tends to give a little bit back. And that's usually right around 1.2, maybe 1.1, 1.3. And so if you ride this thing from about 0.6 up to about 1.2, you can do pretty well. And so historically, for equities, that's been something we look for. Now, JB is taking it to another level, and we can have him come back in and update some of his recent findings, and we're always working together to as a guide, as a yardstick. The 0.6 for entry on the long side, and then a 1.2, 1.3 for the exit on the long side is a good yardstick to start playing with and paying attention. Is that helpful, Doc?
Yeah, very much. Perfect. I kind of remembered it that way. I haven't been looking as closely at that as I had been. I'm just kind of looking at some of the Roy Dick Gex and Roy Delta stuff.
Yeah. So the natural question, just to kind of complete a thought here, that we hear often, is what about the short side? Where do you enter on the short side? And that's a little more elusive. And what I would offer, earlier today we were looking at NVIDIA, the semiconductor stock, the chip stock, and NVDA was pushing a GEX ratio of about 1.6 or so. And if you look back, there's a command we have in the Discord, $GR for GEX ratio, and then you type the symbol. And I think it defaults to 30 days, but you can type 60 after it, or you can type 90 after it, and it'll give you a 90-day look back for the data that we have on that symbol. And what you'll find is you'll see the history of it, and you'll start understanding how the market is playing the GEX ratio for that. Sometimes you add puts, and that can be a early warning indicator to you that price, one of two convergence, and either price is going to come down to match basically the GEX ratio, or the GEX ratio is going to reverse and go back up towards price. So the simple takeaway is, take a look at the history for whatever the equity is you're looking at. And some of these run hot. I mean, it's not uncommon to find a few volatile stocks that are up in the twos, right? A lot of calls. Most of the equity indices, like the ETFs, the Qs, the SPY, the IWM, etc., typically don't run that hot. They typically run under 1.4 or less. And so, they're slower, but they're a little bit more predictable and a little more methodical there in how they behave. And so I would urge everyone to take a look and um, plot those out. So $GR, the symbol name, and then if you want 30-day, or if you want 60-day, put a 60 after, or if you want 90, and you can see what the different ratios are. And then you get a sense. I don't want to call it overbought or oversold because it does it injustice, but it gives you a sense of the history of where it's been, and if you're at a near an extreme level or not. So
It's a little bit of sentiment too, right?
It is.
Yeah,
You're right.
either calls, people super euphoric, or a lot of puts, people pretty pessimistic. So, yep.
So what about something as
Absolutely.
simple? It's okay. We have a put call ratio. We have a DEX ratio, which is the same difference, only with gamma. Is there a put call delta ratio? And I know that won't be correcting for a time as well as a gamma one, but still will give us some kind of sense. Have you played with that, or maybe it's there and I don't know about it? Maybe I
We
gave you another
are
project.
playing with some, yeah, yeah, it's nothing that's exposed right now, Doc, but it's something that John and I have in a spreadsheet, and it'll be forthcoming here probably in on some of the Delta stuff too.
Spreadsheets, my specialty.
But you're but you're absolutely right. It's different, right? Because delta function, it, it it's different than gamma, right? It's not just time and then spot price. Delta also is spot price, and there's other factors that affect delta, and it's much more powerful than gamma, much more impactful, I should say, than gamma, which is. But we got a lot of balls in the air right now, and that's one of them we're working on. But we're actually working on the release that's coming up soon for everybody. We're gonna make some tweaks to the charts and things like that. But for those of you who are running lots of charts, you've probably noticed you're waiting behind others, and the change that is coming soon to GammaEdge Discord for you is that you're basically going to get your own server in the sky anytime you run a command. It effectively will dedicate a machine to you, and if 20 spin up 20 machines, and you won't have to wait on anybody. So it won't return faster. So it'll still take the same amount of time to do something. You're not going to be waiting on somebody else. So I think the performance and the satisfaction from all of you will be. We've heard you loud. We're working to speed that up. So that's been a priority, and we want to get that out here before the year.
Paul, you know what I thought of when you said server in the sky? I thought of the
Lucy in the Sky with Diamond.
no, I thought of a song Spirit in the Sky. Server in the sky. Yeah, I don't know why. I think I was listening to it today, but that's what I thought about it. I like server in the sky. Yep.
Holy cow. All right. Anything else from anybody? Questions, comments?
Yes, where'd the tick chart end up end of day?
I already went over that. You're late. You're late for dinner.
Look,
Prophet
man, I'm
True.
in the airport. I just landed.
Ooh, saucy.
I'll
Hey,
post
it's
it
in
for you.
Prophet
I'm
Tree.
be I'm
Prophet
be
Tree.
spicy on you. What?
Hey, we got both those tick charts posted in the market status for you too, if you want to pull them up. But it's a pretty choppy day.
Okay, thanks.
Short-term moving average is flat. It's compressed. Tick charts or the cumulative tick is chopping right around the short-term moving average ribbon. So pretty directionalist right now with a downward bias, I would say.
Sorry, brain fart. What's the that me brain fart, not you. What's the what's the command structure for the Gex ratio?
$GR.
Dollar sign. Yep. Dollar sign GR in the symbol.
Yeah.
Gotcha, thanks.
I ran the VIX for you in the voice chat there, Doc.
Cool, thanks.
Yep. Fixed GEX ratio finished at 1 today. So if anybody wants to know.
So Demopto, I see your question, is the GEX ratio useful for zero DTE SPX trades? So the short answer is it's probably less impactful because you're not going to get as much of a trend. Every time I want to realize when you run a manual command in the Discord, meaning you sit down at the command line and you type in $sign in SPX, it does calculate the real time GEX ratio at that point in time. And so it uses the spot price, it uses the volatility, all the things that are inputs. So, if you make a of the number that's returned, absolutely you'll be able. Demopto, I think the thing that I find useful, and I'm not a zero DTE guy, so this is where I'm not going to be able to answer your question, and perhaps others will be able to step in. For me, the power is in the divergence of the trend of the GR, of the GEX ratio versus what price is doing. And you're not going to see that. We don't have a minute chart for GEX ratio, for instance. We have a minute chart for pricing, of course, but not for the GEX ratio. And I've never done that, so I don't know if it's going to be useful for you or not. I think it could be interesting exercise, more of a science exercise to look at that. But remember, the GEX ratio is loaded, the majority of it's loaded in the morning with the OI updates that we get from our provider, from the OCC. And then it doesn't, unless the data provider or unless there's been a settlement correction from the OCC or a settlement post that goes out, the OI is the OI for the day. For everybody. This is not just unique to GammaEdge. This is the way it is for every provider that's out there. There is one source of truth, and it's the OCC. I hesitate to say zero DTE would be a huge beneficiary of it, but I'll also say I don't know fully the answer, and I would defer to those who are zero DTs and are looking at GEX ratio to help me to understand and help to do that.
So I'll just give my 2 cents real quick. Kind of what I wrote is I watched the GEX ratios. Obviously, if I'm doing short-term trading, like I want to be a trend trader, a longer-term trader, but this time, the way the market's set up, it's just not set up for longer-term trend trading in this environment we're in. But I am watching the GEX ratios on SPY for shorter-term plays and shorter term stuff because it gives me a sense of what the balance is in the market. So just what I posted, the GEX ratio is the numerical value of the wing charts, right? So if you just glance at the wing charts, it's hard to really get a true gauge sometimes unless you have a massive red wing, massive green wing, or substantially offsetting for your eye to pick up. But if they're very close, then you may not be able to get the exact visual that you need. So you can run the GEX ratio and understand if it's 1.2, 1.3, 1.5, and the wing chart really won't be that far off. So for me, that's what I'm using the GEX ratio as, is looking at the wing chart and saying, okay, the green wing is higher than the red wing. What's the GEX ratio? So then I'll look at that and I'll be like, okay, it's 1.4. So it's just above parity, or 1.3, just above parity, or it's 0.6, right? So if it's 0.6, then you should have pretty decent offset of those wings. So getting to extremes, if we look at the back testing that Paul talked about, when you get up to 1.2, 1.3, 1.4, that's getting to some extreme levels on SPY. So I match those with gamma levels, and I'm looking, am I necessarily thinking this is the market's going to come down or pull back? Absolutely not. But it may be getting to a point where you might get some stalling action. Your forward progress in advance may start slowing down. So that may be a point where you want to look to take profits, or maybe be a little more proactive, be maybe a little more engaged, depending on what your trading plan is. So that's how I've been using the GEX ratios on a shorter term time frame. And I don't know if that makes sense, or but that's what I've been doing, at least for the short term. And obviously on the trends, we understand what those will be when we get nice uptrending environments. Hammer, so you ran that for
That's
60
the
days.
SPX.
Yeah.
And
Yeah.
so the SPX is the only instrument we have in GammaEdge that has special conditions from the provider to us. And exactly what KTB just said. Blame the CBOE, the Chicago Board of whatever exchange there, options exchange. And the issue is our rights and data agreement. They do not provide and will not allow us to provide a data series. So we can't plot open, high, low, close over time. And so what we have to do for the SPX, so we have to, based on pulling from free sources and then patch it in. So it's calculated from, but it's their usage of terms effectively won't allow us to present a data series from the from the SPX, and that's why it looks like it does. And I think, Hammer, you had another question earlier today that I read about. I didn't hear you ask it, but effectively, the SPX is delayed 15 minutes. It's the only symbol we have that is delayed. Everything else is real time. But again, the same rights and data from our provider, who's a direct feed from CBOE, prevents us from doing anything. So not only will they not allow us to pull a data series from historical numbers, but they also will not give us the data in real time. So that's why the timestamps were off, and they're exactly 15.
Yeah, so I ran the SPY wing chart there for with the C code for expiries there, and then the GEX ratio chart, so you can see the wing chart comparison to the GEX ratio, and the GEX ratio is 1, and the wing chart is pretty much 1-to-1. So that's what you can watch there.
Yeah, so this is kind of an interesting. I like this chart. I like looking at GEX ratio, and I would urge everyone to spend a little bit of time getting familiar with it. There's a couple things, Michael. If you highlight right around that November 20th, so go back a little to the left, yeah, right in that. You can see that GEX ratio started coming down before that. So November 18th time frame, you can see price was going up, but then GEX ratios, yep, right there, started coming down. And so we've got this like horizontal movement of price, and it was almost a head fake. I mean, it did come down a little bit. It was almost a head fake. And then it went back up. And like I said, GEX ratio, either price comes down to GEX ratio or GEX ratio goes up to price. It always resolves itself. And so right there, you're talking, right? So now we take back off, prices go up. And you can see now they start to sell as the SPY goes up. They're starting to sell. They're starting to get their closing calls, opening puts right in that zone. And then boom, right there is where you start seeing some of the drop. Now, of course, huge golfing bar there. It all resets again. It's more prominent or more visible on equities than an index, because an index is obviously a mashing of pricing. But this is one way that you can really use this tool to your advantage and look for those divergences. And I think it can be very, very useful to get this morning we did it on NVIDIA. Question on the table was, should I sell NVIDIA here? Should I close? I've got a CCS, call spread. And although I'm not giving any recommendations, to buy or sell any security, we just look at the GEX ratio. And the GEX ratio was not showing any indications of doing anything. It was going horizontal for India. And so in the absence of any actions going on, it was indecisive. The checking of NVIDIA for that clearly indicated, perhaps you should look at the GEX ratio. Perhaps you should check and see what the market is doing. So yeah, so right there is one way to start looking at that. You can see those higher ranges, by the way. Now, if you run JPM, JPM's a different animal here. The only reason I'm bringing JPM to the discussion, I don't know, Mike can run JPM. JPM is a stock that we got into back at the 115 level. One of our members, she identified it as one of the key setups that we have, is when price starts crossing something that we call P-trans. And so when a lot of the members got into it, it was back in that time frame, exactly right in that zone. And you can see that it's been a really, really good ride. Now, there's a couple things going on here. You can see that in November, right around November 13th, you see that divergence right there. And I think you can see price is still continuing almost horizontally, but now we can see the bullishness starting to fade by the GEX ratio falling. And so this is the story that's being written. You can see that it did sell off a little bit. Now it's on its way back up, but banks in general are experiencing. So just look. I'm not saying go to XLF. You can look at XLF, but this is indicative of now of perhaps there was a play there, and this is kind of the divergence that we're looking for. So your eye is really good at multi-day filtering. So keep an eye on this. I personally think JPM is not going to continue to advance here, longer haul, but in the short term, Mr. Market or Mrs. Market here seems to think that there's an opportunity and has been adding some upside calls. So it's something.
All right. Anything else from anybody?
Yeah, Profit Tree. I'm not on my home machine right now. I'm just on a laptop, and I don't have the TradeStation system running here. I have to log in remotely. So I presume which TradeStation chart are you asking for?
Yeah.
Probably that one with your gamma indicator, and if I had to guess.
Hey, Paul, I was just sometimes you'll pull up your ES TradeStation chart. If you could post a screenshot or something out of that whenever you get a chance.
Yeah, I've been tracking both of them. I'm tracking both 22 and ESH 23 now. They're very different, as you probably are aware. There's still a heck of a spread between the two spots. So
yeah, it's not going to go anywhere because of the short-term rates are up.
Right. Yeah. So I'll post. I'll definitely post both shots. I have to log in remotely and generate those charts. I can't do it here. The downside of being in a hotel.
One thing before we go, well, unless there's any more questions, I just posted So the interview that Paul referenced when we talked about Doc on the Bear Trap podcast, I just posted that to our YouTube channel. So if there's anybody new or was wanting a refresher on some of the things we talk about, we hit about an hour conversation. So I would encourage you to go watch that if you get bored tonight or
I
over
do
the
have
weekend.
one question.
Go for it.
The Gex ratio stuff that you guys were talking about, do you have a command line somewhere within the server where we can do a search for underlyings with a certain Gex ratio number?
Is the Gex ratio in our
So-
spreadsheet?
Yeah,
Sorry?
bingo.
Yeah, so we have a Gamma spreadsheet.
Yeah.
It's in the automation section.
Okay.
Are you very savvy with Excel or comfortable in Excel or scared of Excel?
Yeah, I know file, open, save, close. No,
Yeah.
I'm just kidding. I mean, if
Well,
the
yeah.
values are in there, I
To
could
your
I could
to your
get some.
question, in the Gamma spreadsheet in the automation section, you
Mhm.
can download that, and
Okay.
that has I'm pretty sure every symbol we offer or a large set of symbols that we offer, and the Gex ratio is in there, so you can filter on that column and sort
Okay.
it and do whatever you want to for that specific Gex
Uh,
ratio you're looking for.
Are they just equities
And ETFs,
and ETFs? Awesome. Thank you.
no problem.
Yeah, I got it up here. I can't remember exactly what column it is. Anybody know off the top of their head? Oh, there
If
it
you
is.
search for ratio, it'll probably come up.
Yeah, it's over there. It's over on the right-hand side. Yeah, going over.
Yeah, there it is. It's AO, column AO.
As long as the call has
AP.
its, title called Gex ratio or something obvious, I can find it, I guess.
Yeah, it's column
Yeah,
AP.
it's right there.
Yeah, Gex ratio is right there, and then previous
Cool.
Gex ratio is AQ.
Right. This is going to be way above my pay grade, but by any chance, is there something that you guys can code within the server so we don't have to download and all that stuff? Or would that be
Yes.
too resource of a hog?
No, it's not a resource of a hog at all. In fact, we do have scans that we're going to update here. We've got a few to add, and Gex ratio is one of them. It's a common, and so I'll have to. I don't know. Taylor, Mike got it in Notion, but I'll add it to Notion so that we can track it. But I think the short answer here is exactly what Mike's doing. Mike, if you go all the way over to, don't scroll, but just on the left, in the up, just above the number 1, if you hit that little square that, and then at the very, very top, where next to formulas and review, click that. Now, there's three right next to the sort. It's an icon that looks like a little funnel. No, not sort. You don't want sort. You hit the filter.
Yeah, filter.
You see how I put a little pull down now in every column? So what you can do now is pull that little filter down. Yeah, just once. Yeah. And now, wait, no, hang on. Don't get ahead of me. I'm just going to show you exactly how to do this. Go number filters. It's right above there. You see where it's, and just say less than 0.6. 0.6. There you go. So those are all the ones that are less than. And so now you're looking at effectively and you can sort them from now smallest to largest, and you can get the ones that are really down in the dirt. Those could be long opportunities. Valley, and then you can obviously play all sorts of things from that. So it's a good, quick to come up with things. And Hammer, I want to stress something here. So the work like what JB did, he started a sheet, and many of our users asked for the automation that you're asking for. Start here. They come up with a set of rules, and we're happy to code them up as a scan or as a screen. We'll even back test it for you. All the fields that are in this are available in our back testing capabilities. And so if you have a set of rules that you want to play with and you want to test, we can get that scheduled for you. And that goes for everyone, right? If you have an idea, test it out here. If you can move Excel around enough to give a set of rules, then can be explicitly coded, and it's pretty straightforward.
And you're referring to every column header, right?
That is correct.
Cool. By the way, how often do you guys have these Q&A sessions?
Every Wednesday and Sunday night at 8 p.m. Eastern.
Awesome. All right, so I'll take the first week of my trial and do my DD so I don't ask stupid questions and waste everyone's time because I just got here, so I don't want to be that guy.
No question is a stupid question.
Nah, that's what like elementary school teachers say, man. We're grown-ups. I don't want to be stupid questions guy.
I ask the same stupid question all the time.
Yeah,
Yeah, you guys have a lot of channels, so I wanted to reserve my questions at least until, I did some work, because there's a lot to go through for a new guy.
Yeah, and I'll just say, not that my opinion matters, but take your time with it, man. It takes, you sound like a really amazingly smart guy, but don't be surprised if it just takes some time to wrap your head around this stuff. So always
One,
give yourself the patience.
I'm amazingly stupid. I probably have a single-digit IQ. Two, I'm approaching 60, so it's going to take me a little bit of extra time because I'm just not 21 anymore. So no, I'll just take it, step at a time and lean on you guys if I really need help.
Sweet.
That's what we're here for.
So do you guys end with like some sort of a Kumbaya song or something?
Yeah, Taylor usually sings, so.
Okay.
My vocal
I'm just
cords are
kidding.
fried, so maybe next time.
All right, I am finished. You guys can hang out. I got a couple other things to do for tomorrow, so we'll catch everybody tomorrow.
Yep, no, I'm all good here as well. So if y'all have any follow-up questions, just tag us at admin or drop us a DM. I don't really care. We'll get to it one way or another.
Yeah, I'm around for
gentlemen.
A little bit longer if anyone's got anything they want to stick around for.
Cool. All right.
All right.
Catch y'all tomorrow.
Yep, y'all have a good night.
All right, you too. Thanks,
Yep.
everyone.
See you, Paul.
Take care, guys.
Night.